If you're looking for highly educational market analysis, then you are in the right place. This is the Transparent FX Academy. I'm Nick, and I'm a top podder on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight onto the charts. In today's video, I want to speak about gold. Now, why do I want to speak about gold? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis. First, I will be covering the technical aspect. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair, actually on the commodity. Now, starting from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by this complex correction. Now, in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has created basically a perfect correction to the 0.618 golden ratio of the Fibonacci taken on the monthly impulse, which was lining up exactly at this area. And we can see how the market in fact tested this area twice and immediately rejected its zone to the upside. Now, if we look left, we can see how this 0.618 was also a perfect level of previous resistance turn support, which the market obviously rejected to the upside, and at the moment we are testing the 50% and rejecting it to the upside. So everything seems pretty bullish. The last check that we can do is go down on a line chart, and if we do that, we can see how we have perfect previous resistance turn support lining up at this area, and the market has just tested its zone and is starting to reject it to the upside. So here on the monthly, everything seems pretty bullish. We drop down on the weekly, and what do we see? Now here on the weekly time frame, we can see how we are testing very strong previous weekly support and demand, which is now again here support and demand. We can expect the market to reject it to the upside, possibly even creating a new weekly higher high. Dropping down on the daily time frame, what do we have? Now here on the daily, we can see how from here what we wanted to see is the market create a correction at least to the 0.32 of the Fibonacci taken on the daily impulse. And we can see in fact how that is exactly what the market just did. In fact, I did make a full breakdown of gold when the market was around this area, explaining why I wanted to see this rejection to the upside. And by the way, I will link that previous analysis in the description so you can go and check it out for more free education. However, what we can notice now is that from here the market also created this rejection lower, meaning that this area here is now previous resistance that only if the market will manage to break it to the upside would be turned support here. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what the biggest speculators in the market are doing, what we can see here is that with the last report, we had a massive drop in the net positioning. We went from having 220k net positions down to having 172k net positions, with 10.5k shorts added with the last report and 37.4k longs getting closed. Now, this is quite bad for a potential bullish view that we have from a technical perspective on gold. However, it's also important to notice one specific thing. We know that Friday, the day in which it was Friday, it was basically the 4th, but the net positions are reported and the positioning in general is reported on the 1st, because we had a report coming out on the 4th, but the institutions had to report their positions on the 1st. Now, if we go here and we see where was the 1st, we can see that the 1st was this candle here. So during this move to the upside, what was happening is that they reported that here they had created this 10.5k shorts opened and 37.4k longs getting closed. The problem with this is that usually they try to manipulate the reports. So what this means is that now that we have a situation like this, we could get a break above this resistance, because when the market started this move to the downside, immediately it got rejected. And this is a very important candle. Why it is an important candle? Because when the market created this move to the downside, it tested exactly that zone inside of which we had this report. So what could have easily happened is that in order to create this manipulation, which is sometimes what they do, they basically show this, longs closed, shorts opened, then the market creates a move to the upside, quick test of the zone, and immediately the zone gets rejected. And we can see how it got rejected with this 2 weeks, meaning that this 2 weeks here actually show the buying pressure that was happening inside of this zone. And since we had all this buying pressure, it means that they actually had pending orders here to re-add the positions that they closed here. Now, this is not very common, but sometimes it definitely happens that you get movements like this. That is why when you see that something is not really lining up from price action and COT data, it's important to check out these possible manipulations. I know that it might seem a little bit advanced, but this is definitely what could have happened here. And we will have the confirmation of this in the following week that is about to start. It actually has just started by the time that I will be posting this video. And if the market actually manages to break above the resistance, we will have the confirmation that actually longs were added here. And we will see those longs reflected with the new report. So if we will get the break and the retest, here there is the possibility to add even more longs than the ones that were already added here. Therefore, if my thesis is correct and we will see a break and retest of this previous resistance turn support, inside of here, what we will be doing with students is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. And at that point, they will all be indicating for a potential move higher. Actually a strong move higher, because otherwise they wouldn't be creating this manipulation. Therefore, instead of here, what we will be doing is monitoring price action with students from an intraday perspective, waiting for the market to shift from an intraday bearish market to a bullish market. And if the market will do that, at that point, we would be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside. Now, I didn't want to make this video this complicated, but I really wanted to speak about the manipulation that potentially happened around this zone. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. We're currently running a special promotion, so I really suggest you go and click down in description. With the mentorship program, first you learn all the rules of the strategies, then you also have the possibility to ask questions every day and get the answers, as well as having a daily market breakdown every day of the pairs that I'm looking for according to the rules of the strategies. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.